Hey guys, Ken Boy with the Accounting Accidentally website, where you'll find over 500 at this point blog posts and over 400 links to my YouTube videos if you slide further down the page. Wanted to talk about a Quora post that I wrote and responded to. What percentage of your salary do you save every month? And this is confusing. It reminded me of a visit to the doctor's office where I leave my doctor's office. Every wall entrance looks the same. I can't get out of the building. I'm confused. And the same thing is true with the answer to this question. And to answer this question, you've got to do it in a few steps. The first is, what is your investment goal? It may be investing for retirement, down payment, etc. So, first let's think about the investment goal. So the example that I have down here also mentions that everyone should have a $1,000 savings balance to fund emergencies such as a car repayment, a car payment, or to pay health insurance deductibles. So everybody needs that basic $1,000. So let's do that first, and then we'll say that your goal is to save $10,000 as a down payment for a house that you'd like to reach in 5 years. The next question is, how much risk are you willing to take? This is very often ignored with investors, and it's not talked about nearly enough. 5 years isn't a long time to invest, and I say that because if you have losses and you want to make up for those losses with gains, you don't have a lot of time with 5 years. So the question I've always asked people is, if the value of your investment portfolio declined 20% in 1 year, is that something you could live with? And if not, how about 10%? So you need to ask yourself those questions about risk and think about how long you're investing. And this would preferably happen with an investment professional. So now let's think about rates of return, which is the other side of the risk return coin. So Seeking Alpha, a great site that I recommend, has some great stats on what can you earn in the stock market. And the bottom line here is that the average over 64 years, actually more than that, 1928 to 2015, is about 11%. And I see other stats that suggest 8 to 10%. So we have to understand that 8 to 10% is realistic, and anything greater than that is probably not normal. And also understand that we can have huge fluctuations in rates of return. As you see here, down 43% in 1931, Great Depression, up 52% in 1954, the boom after the baby boomers and the war ended, World War II ended. So 8 to 10%, let's be realistic about rates of return. If you decide on stocks and you're willing to take the risk and accept the risk, exchange traded funds are a great idea. I have Investopedia's ETF explanation right here. It's a way of buying stocks very inexpensively. You can buy stocks to match an the S&P 500 index, which is a big basket of stocks. It's an inexpensive way to match the return of the stock market. Final question, really, how much should you invest? Which is the point of the question. Let's assume a 5% rate of return on your money for 5 years. Calculator Soup, which is a great calculator you can Google, assumes that if you invest $1,840 for 5 years at a 5% annual rate, and you reinvest 12 times a year because you're investing monthly, you'll have about $10,190 at the end of 5 years, which is your goal, a little more than your goal to get the house payment. Now, if that sounds like a whole lot, and it probably would be for a lot of people, you can extend the amount of time to save the $10,000 and go over a longer period. So to wrap up, if your salary is $50,000 a year or $41.67 a month, you'd need to invest 20% of your salary a month. That's a pretty big percentage. You may want to stretch out the period, which is what I say in the last sentence here. So think about, when you're answering the question, how much should I invest each month? What's my goal? How do I view risk? My risk tolerance. 8 to 10% is probably realistic in the stock market. ETFs are a great way to invest. You may want to consider splitting up your investment dollars between stocks and something less risky. And you can use Calculator Soup to figure out how much you need to invest. So that's as far as we'll get on Quora. Remember, you can go over to Accounting Accidentally and get information about live courses, free downloads, and other stuff to help you with accounting and finance. Thanks for watching, and we'll see you next time.